you couldn't have found a fault, Amit, with the kind of delivery that you have done, is there something that you thought you could have done better in the quarter or for the year?
Well, there's always room for better, Neeraj, and that's relentless pursuit of excellence and performance that's what we at Waree try to do. But a great quarter for us and a great year for us. I would say almost a breakthrough year. Um, uh, and the primary drivers for that have been the demand and the customers and the trust that the customers have bestowed on us, the financial capability to put up factories and capex, and then of course to execute those projects at scale and at speed, and then ultimately deliver to the customer. I think that's been the not so secret sauce to get this thing done.
Yeah. Okay. So let me start with the good part, the margins. And okay. Let me start with the top line. Chalo. I mean, good quarter, good year. You have the capacities out there to execute. Is the order book addition looking accretive enough for you to be able to meet the numbers that you guys have been talking about? And parallelly there, the order book addition for quarter four, was it a bit lower than what you estimated?
So the order book is very strong. It stands at 47,000 crores. And that again gives us the confidence that 26 is going to be a very, very strong year. Again, customers, the first reason, they have bestowed their trust on us. And that's why we have the 47,000 crore order book. We have new capacities planned. So 3.2 gigawatts of, and you have been to the Chikli facility. We are going to have 3.2 gigawatts of addition to our module capacity. Our 5.4 gigawatts of cell manufacturing is going to be fully functional. And we have the financial muscle to ensure that all of these projects move fast and on time.
Yeah, most certainly. I mean, it's not often that we meet a company which is large in size and so averse to debt, and having the capability, therefore, to raise debt and leave out projects if the cash flows don't quite meet up. And I know the order book is good, but was the order intake a bit weak, or was it a anomaly for the quarter?
Not really, not really. The order intake is something that we execute on, like we execute on all the other projects. We look at orders in much the same way. We have a pipeline that we can see right now of 100 gigawatts worldwide. And so there is no dearth of business at this point in time. And our disciplined sales team is always ready to ensure that our order book continues to hover around the 45,000 to 50,000 mark.
Okay, fair call. Margins, exceptional performance there. Now the question only, Amit, that comes in, it almost seems meteoric, if you will, quite unreal to have this kind of quarter four margin performance that you've done in. Is this a new normal, or was this a one-off and you will revert back to slightly lower levels?
So if you really look at our P&L, so if you really look at our P&L, right, this is the year where actually a lot of leadership changes have happened, and a fair amount of, I would say, SG&A is actually now baked in. And that structure is not going to change as much. Our expenses from a factory perspective are also pretty much going to remain constant or raise in line with the revenues. So overall, costs are going to be very much where we want them to be, and we will therefore expect margins to continue the paths that we are seeing. And that's the reason why we have this EBITDA guidance, right? We have gone ahead and we have said that we will have 5,500 to 6,000 crores of EBITDA, and we are confident about that.
Yeah, but because I'm not able to quite match it at short notice with the revenue numbers, am I hearing you tell me, Amit, that you might actually log in annualized FY26 margins at around 20% or northwards of that?
The way we are going to manage the business, Neeraj, is a razor-sharp focus on EBITDA. That's an important controllable parameter that we have in our hand, and we have broken that down internally into detailed matrices for almost every CXO to go and chase. And so that's how we are confident that we're going to deliver the EBITDA numbers.
So northwards of 20% for FY26 as an average.
I would say let's take home 5,500 to 6,000 crores of EBITDA that I've talked about.
Come on, you might do very well on the revenue front and then the margins may not look that great. So I'm trying to pin you on one of the two things.
I know you are, but I'm not taking the bait, as you can see.
Okay, fair call. Fair call. Let's work with the actual numbers. Okay, fair call. Yeah. The 5,500 to 6,000 crore. But broadly, you believe that the trajectory of margins is sustainable without getting into an exact number. You
100%.
Believe it's higher.
100%. And the reason for that, like I told you, is we have clear sight on costs. And we have clear sight on top line. And so the P&L, as it is going to evolve throughout the year, is pretty much crystal clear in front of us.
I was talking to somebody who tracks you very closely, and the person mentioned that there has been significant working capital improvement as well. I wasn't able to see it, but has there been, and what's led to that?
Again, strict financial discipline. This company runs on a very, very strict financial discipline. Like you said, we are debt averse. That's because it's fiscally very prudently run. And that's the same deal. I mean, we make sure that, we have the right advances. We make sure that we just have an eye on the working capital as we move forward.
Okay. Now, there is uncertainty around tariffs, but there is uncertainty around the negative impact on the tariffs as well with Donald Trump is what he's done overnight, right? For China, for Jerome Powell, etc. So my question to you is, are you guys really worried about what will, and maybe it is a good thing to be worried about, but I'm just asking, are you worried about what's happening in the US geography and what it could do to your US plans as well as export plans? Or do you believe it's business as usual out there for you?
I don't think business as usual exists anymore anywhere in this world. And I think you have to be having your eye squarely on what's going on in the US and everywhere else in the world, right? Now, the good part is, Neeraj, we have a manufacturing facility in the US. We have substantial manufacturing facility in India. And we are closely watching the moves around tariffs and then modulate our response accordingly. From our perspective, what we can do is we can, go in and dial up our production in the US or dial down our production in the US, and likewise for India, and make sure that we deliver again on the EBITDA control parameter that we are going to drive our business on.
Awesome. My final question, and I can ask you about battery energy storage, but maybe we'll do that another time, because in a conversation that we've had with your colleague and co-founder or your founder, Mr. Doshi, he mentioned that BESS could be as large as solar. So I'll save that for another day. But due to paucity of time, one final question, Amit. Global. Europe is coming back on capex of all kinds. My question to you is, would you believe that emerges as a large market for a player like you, which has got global capabilities and ambitions?
So Europe, we continue to have an eye on. At this point in time, it is a very small part of the overall pie. But we do believe that Europe has a huge potential, and especially for some specialty modules that we have, which are flexible in nature. And some of these niche products, we are sure, are actually going to have a very strong offtake in Europe. So you're right, very big market, which we have to have an eye on.
All right, Waree stock in Waree Energy is in focus. Stock is about 8% up.